Welcome! If you're here, it's because you've realized that working for a living is a statistically significant deterrent to having a good time. We've all seen the hustle culture videos. The guys waking up at 4 a.m. to drink a kale smoothie and stare at a Bloomberg terminal. That sounds exhausting. I don't want to stare at a terminal. I want to stare at the back of my eyelids. The goal today is simple. Building a portfolio that pays you $1,000 every single month while you do absolutely nothing. We're talking about I forgot I owned this levels of laziness. We want to invest our money in a way that doesn't require us to understand what a head and shoulders pattern is. Because, frankly, that sounds like a shampoo commercial, not a financial strategy. Most people think that to make serious money, you have to be constantly trading. They think you need to be glued to your phone, checking the price of crypto every time you hit a red light. But let's be real. Your bank account doesn't care how stressed you are. In fact, the more you touch your portfolio, the more likely you are to break it. Let's talk about the local bank. You know the one. It has those glass doors and a bowl of stale peppermint candies. They want you to keep your money in a high-yield savings account. In the United States, high yield is often a polite way of saying, we will give you 3 cents a year and you should be grateful. If you leave $10,000 in a traditional bank, by the end of the year, you might have enough extra money to buy a medium latte at Starbucks, if you have a coupon. That isn't investing, that's just donating your purchasing power to inflation. Meanwhile, the bank is taking your money and investing it in the very stocks they told you were risky. They're the ones doing the trading while you're stuck with the peppermints. If you want to hit that $1,000 a month mark, you have to break up with your bank's savings department. They aren't your friends. They're that ex who keeps your favorite hoodie and never texts back. Before we build the ultimate lazy portfolio, we have to address the elephant in the room. Your credit card. Look, I get it. The points are fun. You get 2% back on a taco, and it feels like you're winning at life. But if you are carrying a balance on that credit card, you are paying 24% interest to chase a 10% return in stocks. That math is worse than a Hollywood sequel. You can't be a lazy investor if you're bleeding money out of your wallet every month. Paying off your credit card is the only guaranteed 24% return you will ever find. Once that's done, we can actually start investing. We want your money to go toward buying pieces of global corporations, not toward paying off that Peloton you used as a clothes rack for 3 years. The backbone of any lazy portfolio is the index fund. This is the sweatpants of the financial world. It's comfortable, it fits everyone, and nobody expects you to run a marathon in it. When you buy individual stocks, you have to know things. You have to read earnings reports. You have to know who the CEO is and whether or not they've been tweeting something weird at 2 a.m. That's work. Instead, we buy an index that tracks the S&P 500. You're investing in the 500 biggest companies in the U.S. If one of them fails, another one just slides into its place. It's like a corporate version of The Bachelor, but without the crying. Over the long term, these stocks have historically returned about 10% a year. To get $1,000 a month, or $12,000 a year, at a 4% withdrawal rate, you need a portfolio of about $300,000. I know, that sounds like a lot of money. But remember, we're being lazy. This is a marathon, not a sprint. We're not trading our way to a Lamborghini by Tuesday. We're building a machine that spits out cash while we're at Costco buying a 48-pack of toilet paper. Now, I know what you're thinking. But what about crypto? My cousin made $50,000 on a coin named after a dog. Listen, cryptocurrency is the energy drink of the financial world. It's fun, it's vibrating, and it might give you a heart attack. If you want to put 5% of your portfolio into cryptocurrency or Bitcoin, fine, go for it. But that isn't the lazy part. That's the I want to feel alive part. The problem with cryptocurrency for the lazy investor is that it's too exciting. You can't be lazy when your money drops 20% while you're eating a sandwich. If you're going to invest in crypto, you have to treat it like a Vegas trip. If it goes to the moon, great! If it goes to zero, you still have your stocks and your dignity. Mostly. Don't let trading digital coins become your full-time job. If you're staring at charts all day, you've failed the lazy test. The goal is to have a portfolio that doesn't require you to check the internet every 5 minutes. If you really want that $1,000 a month to feel like a paycheck, you need to look at dividend investing. Some companies are so bored with their own success that they just give their money back to the shareholders. They're like the grandparents who give you a $20 bill every time you visit, just for existing. These stocks are the holy grail of a lazy portfolio. You buy a dividend aristocrat, a company that has increased its dividend for 25 years straight, and you just sit there. You don't have to do any trading. You don't have to check the bank. The money just appears. Imagine waking up, checking your brokerage account, and seeing that a soda company paid for your Netflix subscription this month. That is the American dream. It's not about owning a yacht. It's about having your portfolio pay for your chips and guac without you having to ask your boss for a raise. The hardest part of investing is actually doing nothing. Our brains are wired to fix things. When the market drops and your portfolio turns red, your brain says, "Sell everything, put the money in a hole in the backyard, buy canned beans." This is where most people fail. They start trading when they should be napping. They move money back to their bank right at the bottom of the market. To be a truly lazy investor, you need to cultivate a sense of aggressive apathy. You have to look at a 10% market crash and say, "Cool, stocks are on sale," and then go back to watching reruns of The Office. Your money is a tree. If you keep digging it up to check the roots, it's going to die. Just water it with monthly contributions and leave it alone. How do we actually execute this? We automate. You set up a recurring transfer from your bank to your portfolio. It happens the day after you get paid. You don't even see the money. If you don't see it, you can't spend it on a 4 a.m. Amazon purchase of a lightsaber replica. This is the secret to investing. It's not about being a genius. It's about being a robot. Robots don't have feelings. Robots don't get scared of crypto crashes. Robots just keep buying stocks every 2 weeks like clockwork. If you use a credit card for your daily spending to get those points, pay it off every single week. Don't wait for the bill. Stay clean, stay automated, and stay lazy. So, what does the actual portfolio look like? For a US-based investor, a classic lazy setup might look like this. 70% total stock market index fund. This covers all the US stocks. You own everything from Apple to the company that makes those little plastic things at the end of shoelaces. 20% international index fund, because occasionally, other countries actually make things we buy. 10% fun money. This is where you put your cryptocurrency, your individual moonshot stocks, or your weird trading ideas. This mix ensures that you are investing in the growth of the global economy while still having a little bit of skin in the crypto game to keep life interesting. But the bulk of your money is safe in the lazy zone. To hit $1,000 a month, you just keep adding to this pile. It starts as $1 a month, then $10, then $100. One day, you wake up and the dividends and growth are doing the heavy lifting for you. You've successfully fired your boss, and your new boss is a diversified collection of tickers. The path to wealth isn't paved with stress, 80-hour work weeks, or frantic trading sessions. It's paved with boredom. The lazy portfolio works because it respects the most powerful force in the universe, compound interest. You don't need to be a bank executive or a cryptocurrency wizard. You just need to be consistent and, ideally, very, very unbothered. Stop checking your credit card rewards and start checking your investing goals. Stop letting your money rot in a low-interest bank account and start putting it to work in stocks. Now, if you'll excuse me, all this talk about money and portfolio management has made me tired. I have a very important appointment with my couch.